It is expected that the European Central Bank will keep interest rates at current levels, but may cut economic forecasts for 2013. U.S. stock index futures were little changed as investors awaited weekly jobless data. I'm Lindsay Bell, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsay Bell with The Street, and together we bring you the morning call. Scott, it's been a rough week for trading. We've saw a lot of different movement down early this week, mixed yesterday. Today we might be flat opening up. How are you setting up going into the end of the week?
I'm just trying to take trades. I'm trying to be a bit more methodical and not have too much risk on. There are compelling spots in the market to put risk on, and then there are some spots where the market has to prove itself. And recently, the market is proving that it could hold higher, that it's showing commitment to some of these levels after a really nice move from the 1350 level a few weeks back. But it's very choppy, it's a little erratic, and not everything's participating, so you have to really narrow your scope, read the charts, know your levels, and have very specific strategies based on sectors.
So looking at the S&P in general, a broader view of the market, what are you seeing there? What levels do you watch?
Well, right now we've been holding above, just say, the 1400 level. So if you turn to the chart, you will see that here we are. This was that move from that November 16th low, a good spot to switch gears, perhaps test some longs after a calculated move of this uptrend that broke. If you got out around 1440, you start to lean short. Once we broke below and couldn't get back above, this was a nice spot to switch gears. Okay, and then at that particular point, you had some follow through. We held higher, and we've been just grinding higher, so to speak. But once we got to the 50-day moving average, there's your resistance, there's congestion, so a nice spot to switch some gears. But from there, we've had about 3 days worth of action, holding higher, a bit of a downside bias, but still above the 200-day. The oscillated has gone from like plus 60 closer to neutral, but still not exactly there yet. So I think overall constructive, but intraday it's been very thin, very whipped around by headlines, so not the easiest environment to trade.
Getting into the sector spotlight, we're going to take a look at the financial stocks because yesterday we saw a nice little rally there that was led by Citigroup. They announced that they were cutting 11,000 jobs and closing 84 locations there. The stock rallied on it. It was up, ended the day up over 6%. It was above some key moving averages on this move. Is there a trade still to be had after the move?
I think if we see commitment to it, but it's almost ironic where 11,000 people have to lose their jobs, they have to take big write-offs, and I think that's been somewhat of the theme of the last few years. That's why everyone's so upset, is that the market is doing okay, but it's at the expense of technology taking over jobs or cost cuts because of the shrinking economy or what's going around the world. But overall, you have to disconnect yourself from that because it doesn't mean stocks can't continue or give you a nice trade. So that announcement by Citi, if you look at the chart, is what ignited this move. Okay, you've had a really nice move in Citi all the way back from August, and then you had a controlled pullback, above the 200-day moving average, and right here it was tight, and boom, it sparked a move. It was pretty fierce, and there was some volume attached, and now this could open it up for a move back to the highs and then maybe higher. So at this point, nice trade, I would say, as long as it stays above 35.50, you'll see some commitment to it, and I do think you watch it to see if there's some more upside, but it's going to have to get above yesterday's high of 37.07 for that to happen.
If we look at Bank of America, there was a nice move there. It got above $10. It even hit $10.56 yesterday. I know you've had a long trade there yesterday, which was nice. What are you looking at for moving forward? Do we need to see consolidation?
Well, what's interesting is, we talk about time frames and multiple time frames, and there are different types of traders. Everyone has different approaches and risk tolerance, and some people trade for cash flow, for active igniting bars, and some for swing longer-term moves. And yes, there was a first time that in this stock for a while that they both combined, where you could have been sitting in a swing trade and then added a few tiers for a breakout move to make money, make cash flow for that movement, then maybe take some off and stick with your swing trade. So if you look at the chart here of Bank of America, you will see it was getting nice and tight for actually since like September. Trying to stay above $9, trending a little bit higher. Then finally, it started holding in the upper end of the range. At the same time, a lot of the other banks weren't. So this was showing me relative strength. This is why I was keying on it. You could have been in your tier 1 during this process, getting ready. I know that I tried to add here, it didn't work. I tried to add there, it didn't work. And then finally, 2 days ago. I'm like, you know what, it finally feels ready, so I added, and then I even added yesterday. So at that particular point, really nice trade. I talked about trimming trail into the strength, but overall, you look at the chart here, and I think it can continue. I think you take some off, but you stay with some of the move. Okay, actually, I'll go to the weekly so you can see it better. Look where it's just breaking out from. Obviously, this was a long time ago. I don't expect it to get back there whatsoever, but I do think we could see, $12 to $14 next year. So with that said, here's your breakout move. I think, right around what's this price right here, right? 1090-ish. So 1090, I would say, if you're not that committed, take some off. But ultimately, I do think we can get 12 to 14 next year. So stay with this trade if you're a swing trader. If you are, an active trader, you had a good move yesterday, and maybe take some off as it gets closer to 1090.
Interestingly, Morgan Stanley has been the laggard of the group all year long, but yesterday it hasn't had a nice move, was up over 2% and tried to reclaim its 50-day. Scott, looking at this stock, is there a level that you would become more constructive on it?
This one's been a laggard all year, and it's not showing anything great, but if the banks continue, people are like, where can I go? And Morgan does have somewhat of a tight pattern here. And if you look at the chart real quickly, it's trying to reclaim its moving averages. It already reclaimed more than half of this wide range bar, so it's negated it now. So there's been enough sideways action, above this level. So at this particular point, for it to really get going, so to speak, it's going to have to trade above 17.12, 17.15, and then maybe we see, a move back to a bigger resistance, which is around 18.
JP Morgan, let's take a look at that stock. We've talked about it a million times. It's the best in breed bank. It's up over 25% on the year-to-date time basis. Stephanie Link and Jim Cramer at Action Alerts Plus actually owned this, but sold out of it. Their full position on Monday, given concerns over valuation and capital markets. But I think for the longer term, the fundamentals probably still are there. They potential buyback and dividend increase coming along the lines. Is there a trade for the shorter term here, though?
Yeah, I'm hoping. I got involved in it yesterday, seeing the strength in the banks, and it hasn't had the greatest setup. They've had some negative headlines over the course of this year. Obviously, remember the whale trade that hurt the psyche of the stock a little bit. It's made its way back up, but it hasn't been very exciting, and it still doesn't look that exciting. You look at the chart here, and you will see that I remember the low that when they came out and they finally disclosed what the big write-off was. You had a nice move up, and then it's been methodically going higher. It's above the moving average. What I like right here is that there's a tight little inside channel. So on this day, got in a little bit. I think in order for it to get in motion and start to get a little better, so to speak, it's got to get above and stay above 41.50. And then this one also will then have its downtrend above 42 to contend with. So right here, I think this is an area that could get filled, and it could be a decent trade.
Wells Fargo is another large cap bank that has had a similar move as JP Morgan there. The nice thing about them, though, is they have greater exposure to the mortgage business, which will be a benefit, and also they don't really have that exposure to Europe. So Stephanie Link at Action Alerts Plus actually owns this name too. You're looking at it, though, for a trade.
So she switched out of JP Morgan to get into Wells Fargo?
She's been in Wells Fargo, but she's holding on to that one. She thinks there's more upside, whereas JP Morgan just thought the valuation was a little too rich here.
Okay, so you look at the chart here, this looks just like JP Morgan almost, whereas you have a lower level inside channel, not at the highs like we saw with Bank of America, not even like Citigroup, but at this point, and if it starts to get above this resistance, and this resistance is like 33.33, it could get in motion, and then the next resistance comes into play right around 34. So I think there's a trade there. Overall, it's very choppy. There's a lot going on here, and there's nothing too clean, but right now, this is an objective it's going to have to get over.
Okay, well, let's take a quick commercial break and get back into it after this.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back. We're going to talk about China. Yesterday on Wednesday, the Shanghai index reached a new high, or the highest level it's been in 3 months. So we saw a lot of the industrial stocks rally on this news. We got the new regime over there. They're working towards economic growth. Looking at some of the stocks, we'll start with Caterpillar. I mean, it's been a laggard in the industrial group, but it started to rally with the market in mid-November. Here, do you think that this rally has legs? for Caterpillar.
I think if you exited the right way, because it showed a lot of relative weakness this year, this is a spot that's interesting. I'm actually long Caterpillar because I see a tight setup for a trade. So for fundamental people who think China has bottomed, who think that some of these plays are going to get attention because money's rotating there, I think it's worth a look. The Shanghai index was up 2.9% and then really didn't give much back yesterday, so it's showing some commitment to that. So that could also help with the enthusiasm. If you look here at the chart of Caterpillar, you will see not a great year for Caterpillar, which is a little, not the usual for this type of stock, but you have a high, lower high, and then once it broke this support where prior broke out from there, that was your exit. And from there, it's been a pretty methodical mess. And now we have a pennant right here. So you take a look from these lower levels. If you want to initiate a trade, at least you have an entry. Okay, yesterday I participated in the rally, closed okay. I would say above 86.57, it could start to get going to the upside. First objective would be, right here at 88.60 and then the moving average. So right now it is a laggard type play, but sometimes these laggard type plays get in vogue and at least you have a calculated way to get in because you have this wedge type formation. You could see if it resolves to the upside and you could put a stop like right around here at, right around 84-ish.
Vale is another stock that you look at. It's been a tough one for this one all year long. Stephanie Link actually owns this one too. It's one of her ways to play the China recovery. It popped 3.5% yesterday on the move in China there. She likes it because it does have a low valuation and low expectations given the move in the stock, but she thinks it's a good way to play the recovery in China and Brazil both.
Okay, well, if you're not in this one, and that's what her thoughts are, it looks cheap, so to speak. As far as the chart's concerned, it's been under pressure for a while now. It's been actually pretty gross from the peak right here. A period of lower highs, and then it broke support, and since then it has been churning its way all the way down. So down here, if you like it fundamentally, let me see if I see something on a technical basis. I don't see anything blaring, but it is trying to get above this little lower level flag type thing. It's not great, but I guess above yesterday's high of 1787, it can get underway a bit, and then your next resistance would be right around 1850. Again, it is calculated, right? You could trade it versus this long-term support. Long-term support here is just say 1690-ish. So right away your risk reward is defined. As it leaves this lower flag, see if it can get to this bigger resistance. But at this point, showing no relative strength, showing no igniting bar. But I guess if you're looking for something that could, be put on the radar, do a feeler here, and then it'll start getting on a lot of people's radar if it could break above this downtrend and test a moving average there around 1974.
Emerson is another stock that Stephanie Link owns. She likes this industrial name because it's achieving all-time high margins given its leveraging, its volumes, and strong execution despite this global macro environment. Also, they're probably going to sell off one of their network power divisions, which could be a positive for the stock. But, I mean, if you do look at the stock, it's been trading in a range, and yesterday with its move, it reached the top of that range. So what's it going to take to get past that?
Well, it's this one. The chart looks better. It's showing relative strength. This is something that investors haven't had to deal with some pain and anxiety. And at this point, you want to get involved in things that show relative strength because they typically continue when the market's positive. So you look here and you'll see that this is above the moving averages. Okay, you do have a pretty long-term channel here. Okay, look at the size of this channel. The channel from 44. It's been, what is this? Almost a year and change, and then now it's getting closer to the upper end of the channel. So with that said, it's still in the middle area. You could draw a line right here. So this is, it's in the top 2/3 of it. Yesterday it did participate with the rally, and I think it's in the game. Traders, if you want to take a look above 50.84, could get it going, and then at some point, this does seem like this could, be on the radar for 2013 because I just see the size of this channel and how long it's been consolidating, and if it were to get above this at some point next year, 52.81, you could then see, a move which would be measured of about 44 to 52. That's about 8 points, so it could take it to about $60. So I like this. I think it's on the radar on investors. Maybe you could put it on as a swing trade.
FXI is the China ETF. It's a way to play the Chinese stocks over there if you don't want to get involved in them because, it's questionable, those companies over there.
No.
But anyway, Stephanie Link was buying this one on weakness recently, but it looks a little bit stretched here given the move that we've seen.
Yeah, I think when DeMark, who has a great technical system, came out and said that he thinks that the Shanghai Composite could go up 48%, everyone was looking for a way to buy it. I know I was. I tweeted out, I'm like, I agree. I think that buying the Chinese markets down here is better than selling it, for mid to long term. And a lot of people went with the FXI because it's the only things that they know how to grab. So if you look at the chart here, you will see that it wasn't at the lows like the Shanghai Composite, but it was trending higher. This was a decent spot, that rallied, came back, retested, and now you have a really big gap here. So I would say let it hold and go sideways and hold this gap for a period of time. Let it hold above 37.88, and then you could buy it versus this, and then at some point, if the Chinese market's going to continue, it'll have to get above yesterday's highs, and then the next key resistance is around 40 to 41. But overall, if you're looking for a vehicle to ride the Chinese Shanghai Composite, this probably isn't the best one, but this is showing you some strength.
Well, we're going to get into some quick hits now. We'll start with Apple, which probably isn't going to be a quick hit, given the large move that we've seen in it. But what is going on, Scott?
I think that's what everyone wants to know.
Yeah.
And people are trying to put their opinions on it, and that's how they're getting in trouble. All right, the move started a few months ago when it petered or topped out at 705. All right, it turned into a flexible type trade, around 681 to 21-day moving average. I was like, you know what, now's the time to trade it. Fast forward from there all the way down to 705. At 705, November 16th, you had that reversal, traded from those lows back through the prior morning. You look at the chart here, and you will see that was this day, right here. Okay, so that was a nice little long around 522 if you took that strategy. From there, methodically, it went all the way back up to test the 200-day moving average, which is now at the 50-day, which is rolling over, which is what they call the death cross. So with that said, this was a good spot to sell some. I actually, I was long this on the virtual trade floor for the pretty much the 90% of this time, and then I sold it here. But I made a little mistake because I took some home long yesterday, thinking that this support would hold, and then all of a sudden I got stopped out right around this 563 because I figured if we don't hold 563, if it doesn't hold higher, then this rally off the lows, okay, in my mind was invalidated. So boom, no one expected that to take place, but it did. So here we are, we're right at the gap that started around 539.88. I think it's opening a few dollars lower. Just use this as your pivot. I'm going to do a level versus a level that's 538.77. It's open below it. If it can get back above it, maybe see how much of yesterday it takes back. I'm not sure. If it takes back a majority of it, maybe this was too emotional. Maybe the margin scares were too much. Maybe the China Mobile, maybe the insider selling. A lot of things went on yesterday to add a fuel to this downside move. But overall, if it wants to bounce back, I do think there is some room to about 554. So we'll see. If it doesn't really bounce and holds here, it could fill the entire gap, and who knows if that might happen today. So use points of reference. Do not. What people do in Apple, unfortunately, is that they play the cost average game because they think that ultimately Apple will save them. Yeah. And a lot of people started that at 650, 620, 580, and then who knows if they made it all the way to 505. So at this point, I think it's a level versus a level. If you're an investor, just make sure you watch it a bit closer. You know your risk. Maybe you have a hedge on, you have a collar where you sell some calls, buy some puts. So this way, maybe it costs you a little bit, but you're a bit more protected because we've seen great stocks, in America, have their cycles and go up for a decade, and then they falter, then they break trends, and then people catch up, their growth slows, and it changes. So I'm not saying this is changing. All I'm saying is right now the psyche of Apple has changed. You can't just close your eyes and buy it and say I'll be saved because a lot of people who did that, I got hurt, and Apple, I talk about it, it's never a short hit.
No, it's okay. But let's look at a couple more stocks before we end the show. We'll start with MasterCard. It's up 30% year to date. It's had a nice move. People are, betting on the move to paying with cards from cash. What are you seeing in the stock?
Well, every time MasterCard has a pull-in, it's been a typical buying price. So right here, I think you could try it. Again, this is an outside day. You never really want to see this happen. So if you played it for momentum, hopefully you get out there. It is trying to hold this moving average and the support. So if you want to be long, it'd be long at verse 470, 440. If you're not committed to and you're a little scared of the market, if it breaks this level, I would use it as a stop. And
how's that compare to Visa? Quickly.
Let's see, quickly, Visa. Visa has been stronger, a little, not as erratic, but it's not as high priced. 3-day down move into this support, try to reverse. It's still in the game too, but if you're not committed to Visa, this could be your stop right here also. But longer term, here's that trend line, so it all depends on your time frame, but this one has been a chosen one.
Well, those are the stocks we're looking at, the sectors we're watching, and the levels in the S&P 500 that we've got our eyes on. Be sure to tune in at the end of the day with Scott and the T3 Live team for their daily recap.